Okay, hello everyone, and good morning. Welcome to weekly market outlook. Basically, the first one we're having for the year. We're going to look at potential trade opportunities. We'll look at the previous year, how the market has reacted in some of the pairs, and what we could potentially expect going forward. Okay, so as usual, if you have questions, just type in your questions in the chat box, and I will come back to them to answer your questions when due. Okay, so first off, we're going to begin by looking at the DXY. So the DXY is the dollar index. It measures the strength of the dollar against the other major currencies. Okay, so for a while, for the most of last year, the dollar has been very strong. So the dollar has been actually very strong for most of the year, from around mid. So it was a little bit weak going into the first quarter, and then during the second quarter, it became aggressively strong and has been incredibly bullish. So the dollar has been strong, and then toward late last year, around October, we began to see some shifts. But then in mid-November, we saw the breakdown that suggested that the dollar is beginning to look weak. So a weak dollar, if we're anticipating a weak dollar, then it means it will affect things like Euro USD, pound dollar, dollar yen, dollar CAD, those dollar related pairs. So if dollar is weak, then pairs with dollar as the quote currency would be appreciating, and pairs with dollar as the base currencies will be depreciating. So the DXY, the last time we had this outlook, I was anticipating that we would see price, pull back up. Is my brush so I was anticipating that we'll see price maybe come back and make some sort of pullback before coming down, but price didn't do that. It just continued to trickle down. Now, the one challenge I have with this, not challenge per se, is it still looks like price might go up before maybe continuing in the overall direction. But one thing is clear is that price has broken below support, or below supply demand area twice, and then so this means that we are most likely looking at a potential bearish market. I'll be anticipating, at least going into the year, I'm anticipating that the dollar would be inclined toward the bearish side. So if we look at the weekly markets, the weekly time frame for this, you could see that. So we had this. So let me zoom out a little so you can see this movement in price, where the markets, from this low, we had this push up, an aggressive pullback, and then another push up. So price has been making this sort of highs, high to lows. And so looking at this, usually with looking at historical setups, we tend to get deep retracements. So even though long-term dollar might still be looking bullish, we could see some further slide during the first quarter of the year, as the dollar would lose some ground before potentially gaining it back. Okay, so let's again look at the monthly charts here. You'd see that even better. So if you take your Fibonacci retracement to here and just go from low to high, you'd see that we are currently close to the 50% retracement level. I'd anticipate that we could see price drop into the 61.8 fib level, towards the 78.6 fib level, maybe even deeper. So this region here, for the coming few months, is probably going to be some sort of target zone where dollar could find potential support before heading back up, right? Because overall, you can see that the market structure is bullish. So we're going to probably see some continuation of this bullishness, but that would not be until the price has decided. So we're not going to start forcing buys. We're going to wait for potential areas where when price begins to make setups that confirms it. So this red zone here, this zone of interest for me, is an area I'll be looking out for. Now, taking that and going to the Euro USD. So we go to Euro USD, you'd see the inverse correlation of that. So the Euro USD is inversely proportional to the DXY, or the dollar index, right? So you could see that for most of the year, the dollar, euro against the dollar has been dropping. And so we've had this kind of, you can see the market has been bearish from this high, making lower lows, lower high, lower lows, lower high, basically a low, a lower high, lower low, lower high, then another lower low. So right now, we're still overall long term, we're still in the bearish market, but we could see some sort of retracement before a potential continuation or a breakout and then a new setup. So we don't know exactly what direction it will take, but what we know is we are within the retracement of a higher time frame structure that could continue into a continuation of the bearish nature, or breakout of this bearish nature and begin to form bullish setup. So the same way, if we go from low to high, just draw our feed from low to high, like so, you'd see that we have, we are currently at the 38.2 Fibonacci retracement area. This could be a valid area where price might want to retrace or, begin to retrace. But price, historically looking at this, you could see that we usually tend to get deeper retracement, deeper retracement, deeper retracement each time. I think this would be the one time where we didn't get that deep of a retracement. It only pulled back to around the 61.8. That was even deep. So it still got to the 61.8 fib retracement level, which is also quite deep. So historically, we tend to get at least the 50.0 or 61.8 fib retracement level, and I could even anticipate a 78.6. So this area here, right, this whole area here could be potential targets going into the new year. Now, another thing that we might want to do is look for yearly pivots. So if I just go to the indicator here and let's put in pivots and see if we can spot where the yearly pivots for this instrument are, that could also offer us, it's not market, the price doesn't always run or retrace to yearly pivots, but sometimes it does. And if this happens to be one of those times, so let me see if I can, I don't know why this is not pulling up. Let me see. My indicator tab is not clicking. Anyway, I'll probably put that up the next time. But we could see price retrace back into this area after such deep levels. Now, this is the long-term outlook. Now, what could be the short-term outlook? So let's go down further and let's even break this down. So let's look at the daily chart and see potentially what could we see, right? Now I'm going to delete this Fibonacci because it's just going to confuse us. And you'll notice something here. We had this, so let me get a parallel channel. Where's you? Yeah. So you'd see we had price moving in somewhat clear. I talked about this one for a while last year. We had price moving within this channel, and it is bearish nature. Prices was clearly staying within this structure, and then we had the breakout here. So I talked about this in this case. For some of you who are on the Telegram channel, you'd notice that we were actually looking for buys around this area when price broke out and started retracing back into some leftover order blocks. And so, as a matter of fact, I traded this the majority of this move up, anticipating for price to pull back. We didn't get the pullback. And so looking at this now, the short-term options could be, now here's the thing about this where price is bouncing away from is some sort of a major area. So yeah, it's possible, right? It's possible that price could very well continue to drag itself up and up and up and up into this area. But personally, I don't like to chase the market. So what I'd like to see is for price to maybe consolidate a little bit and then give me an entry to then look to buy this, right? If price continues to go up, I'm not going to try and force buys, except maybe, although I might look for smaller time frame, 1 minute, 5 minutes setup. Well, as far as this whole EURUSD setup is concerned, what I would like to see is for price to maybe consolidate a bit, maybe make some sort of bearish channel, and then break out of that to serve as confirmation for us to look to buy into this area that we were looking to be interested in. Okay, so that's the way I'm looking to approach EURUSD. Like this setup, I'm looking for bullishness. But in terms of long term, I'd like to see price consolidates and then give us an entry to look to trade. So that's being said, I will move on to other targets. let's look at GBPUSD. So GBPUSD is actually looking technically more sound. At least it's not running away, right? Price broke out of this trend line, and then the market began to to basically just channel in the opposite direction, gliding its way up and down. It seems we're having that expected pullback. So I kind of like what price is doing here. So it's now time to maybe look for, okay, how could we possibly approach this to trade this? So let me just take this off. Right, so we've broken out. This is where we broke out of the trend line. And then going from this low here, let me just move this, from this low here, right, to this high here. Simply, I like to use the fib tool just to see the percentage possible retracements, but you could see we're currently at the 382 from this low to this high, because this you could even say this low, but this is the actual low that forms this high. So we could pull back down into, let's say, 618 or the 786. Now if you drop down to even the 4-hour charts here and see if we can find areas, you start to notice some leftover order blocks. So for example, I quite like this area just around the 78.6 Fibonacci retracement area. So my anticipation is that we could see price drop here. Potentially, it could even drop down further into this area here. So we could see price, anticipating to see maybe we see price drop further and then look for buying opportunity. Now, it's also very possible that price would very well continue to drift higher. You see how we had this, it seems like we're having some sort of Y-curve accumulation schematic here where we're having weak to strong hand transfer of power. So if we get back into some sort of previous order block, I could actually look for buying opportunity, but I would also be anticipating that could fail and then we could come back down here. So I'll be looking for confirmation to buy around here. And then if I find that, I'll get involved buying. My stop loss will be just below the structure. Otherwise, if price breaks, I will be looking for confirmation to buy around here or around here in the coming weeks, days and weeks ahead. Okay, so GBPUSD, I quite like this one. So if we look at the inside structure here, this would be our the main structure. And then zone of interest would be something like this. I would probably go down into smaller time frame to refine this, and then wait to see if price will give us a trade where the market comes back down like this. I could look to keep my stop loss just below this area and then look to go after this high here. So in terms of risk to reward ratio, that would not be bad. It's about a 1:6.2 or 6 points thereabout, average 6.3. So we'll see if we get that, but I would like to see confirmation around this region before looking to get involved in any trade, because I could anticipate that price could drop down even further. Okay, so I like this one. I'll keep this one in mind. Let me just set a chart alarm to see if price comes here. Okay, let me just set a chart alarm. I think something is wrong with my trading view. Some buttons are just not working well. Anyway, I'll come back to you. Let's also look at USDJPY. USDJPY. So USDJPY, let's go up to the 1 month time frame. And let's even just hide this. So you'd see that, for years, this pair has been bearish, very bearish. Then also for, since price tapped into this region, the market began to aggressively push higher, right? And now we're looking at this. So this is the most current swings that started from December of 2020 and peaked at around the April of that peaked on October 2022. So from 2020 to October, from December 2020 to October 2022, we had this aggressive rally. Now, simply if we just, let me just delete this. If we just if we just use our fib tool and go from this low here all the way up to this high here, we could see that, you know, we're currently at 38.2, approaching this 50.0, and then the 61.8 is just below, and also the 78.6. I quite like the 78.6, but we'll see, time will tell if we would ever get down there before continuing higher. So notice what we're doing here, but having the long-term approach. The long-term outlook on this pair is for it to continue to remain bullish. However, the short-term outlook might be that we do find some setups to sell into a future buy. Now, the buys might occur in April, in May. This market could be bearish for the next 2-3 months or the next 1 month and then become bullish. Or it could even actually become bullish now. But this is our outlook to the markets, right? We'll plan our trade and then allow the markets come to us and then look to execute our plans. Okay, so for this one, long-term I'm bullish, short-term I'm bearish. So let's go down into the smaller time frame and let's even look at the daily chart. Okay, so looking at the daily chart here, I think I can delete the fibs, don't need them. Looking at the daily chart here, you'd see that we are beginning to break structure. So based on the Y curve, we like Dow theorem, so Dow theorem of market structure, where price usually tends to stay in a particular, if price is bullish, it tends to stay bullish. Sometimes it would make inner structure that appear to be break, but then overall continues to stay bullish. Now, when based on Dow's theorem, when we actually begin to look at the change in trend is when the market breaks down twice at least. So we have a breakdown twice. Now you could see that, for example, in this area here, we had a breakdown, but it was just one breakdown. And then here you see we have a break. So we made a low, a lower low, then we made a lower high, and then we made another lower low, another lower high, and another lower low. So this could then suggest that price is probably ready. It's not the guarantee, but it's probably ready to begin to head down lower, at least temporary, based on, you know, the market is fractal, based on the structure that you are looking at it, or the time frame you're looking at it from. So going by that theorem, we've been bullish all through. I've been bullish on this. I've been talking about this one to you guys. We made some lot of good trades buying all of this. However, notice how price began to break down to the downside. The price began to break lower. So where's my trend line to? So we had our first real break here where price broke lower, right? So we had a breakdown of you know, a lower low there. And then we had I was actually anticipating to see price come back up here, but the market didn't want to do that. But then we had another high and price again break down lower. So we had lower low, lower high, you know, so let me draw that up. So we had a lower low, you know, a lower high, and then another lower low and another lower high. So based on that theory, it's safe for us to, we might be wrong, but it's safe for us to start looking for sell opportunity. But based on our overall higher time frame perspective, we have an idea of, okay, this market is still bullish on the, let's say, the monthly time frame. And then we could anticipate, we could look to, okay, where could it potentially get to? And then we look for those areas as potential targets to go after. So therefore, USDJPY, I'm actually quite bearish on this one. This would have been a good place to look for buys, for sales. Let's see. So this is the daily chart, right? So let's drop down further and let's look at the 1 hour time frame, right? So what we can do, remember, we have a story as to what we expect the market to do. Now we want to look for confirmation before we jump involved. So just because we're anticipating price to go down doesn't mean we start setting. It's always best to look for confirmation. So confirmation in structure would be something that I like. So you see price making higher highs, higher lows, higher highs, higher lows, higher highs, and then we break down and make a low that takes out multiple previous higher lows. So what this means is we could potentially head back up towards somewhere like this, or maybe even area like this. So this is what I might be interested in doing. I actually probably be interested in looking for sell opportunity, maybe 2 sell trade setup, right? Something like this, where I'll probably look to sell here, probably with a smaller risk, with confirmation, but you know, aggressive stop loss above there. My targets would be at least this low. But now we can now use our overall higher time frame perspective and target even lower lows, but at least this low, which is also a 1:2, not the best, but also not terrible. And then the other setup, which I would probably prefer, would be if we get a sell. So let me dress this up, where we look for entry around here. Stop loss still just around this area, and we still go after the same low. Now, this one would have a better risk to reward ratio of about 1:10. So if price finds its way up into this area, I'll be interested in trade 1 and also a trade 2 to look to sell this back down. Now, this is the, what I say, primary targets for this structure. But overall, I would have higher time frame structures or higher time frame targets based on the monthly structure that we just looked at. So it could be as low as here, of which I'll definitely be looking to partial as price begins to move our way. Okay, so that's USDJPY. Let's also look at some other instruments like USD CAD as well. So USD CAD is one where I wasn't anticipating price to drop down into this region. We've still not seen that drop. So you could see my Elliott wave theorem here, basically. So we have wave 1, wave 2, wave 3, wave 4, and a wave 5. And then I'm saying, okay, do we get a or continuation with A, B, C to then continue higher? So but for this one, remember the dollar, we're looking at the dollar is quite weak, so we could see price drop down here. This could be a target for us. So the question is, how can we potentially look to trade this? Now, if we drop down further and let's see, look at the 4-hour charts here, you notice that we are beginning to break down. We're beginning to break structures to the lower side. We have a break of structure here. Break of structure here. We also had a break of structure here. I'm sure we had an inside break of structure here. And then, so what could we potentially do? We might even see a structural break here, which would also be fine if we break below this low. And then what we could do, or what I could be looking to do, is look for retracement if we get those breaks. So if price breaks below or begins to retrace, right? So if price begins to retrace, I could then look for sell opportunity to then take this back down. Okay, so keep this in mind. This is the 4-hour chart going into the remainder of the week. We could, looking for, so let me even look at the 1-hour chart and see what we could potentially look out for. So yeah, potential sell trades from around here. Now this would be with confirmation, because the other thing will be to put your stop loss here, which is quite, based on the risk to reward ratio, it doesn't make sense. So, but if price approach here, you could look for confirmation to sell. Otherwise, wait for some sort of setup. Now, price may not give us this deep retracement, and even if it does, it may begin to break higher. So you want to confirm that with even smaller time frame and look for structural shift on those smaller time frames to look to get involved in a sell. But this is a trade that I would be interested in getting involved if price were to somehow find its way back up here. I'll look for confirmation to sell this and take it down. Okay, so that's USD CAD outlook, or the way I would be looking to approach that. And finally, let's talk about gold, which is XAUUSD. So gold has been very similar to the EURUSD, bearish for a while within a channel, broke out of the channel, and is beginning to push higher. So if we look at the monthly charts, let's just look at the monthly chart to see that same structure. It's in the monthly chart doesn't really resembles the monthly chart of EURUSD, but you can see the similarity. Gold historically tends to have a good first quarter of the year, so we could see gold continue to push higher. You could see we're having back-to-back push on the monthly time frame, or back-to-back bullish candles pushing price higher. In terms of Fibonacci retracement, this one is already within the 618 fib area, so we could see some pullbacks. But all overall, I'm still bullish on this one. What I would like to do is see look to get involved in some smaller setups to continue to look for price to take to head higher. So I like this area here. If price were to drop down into this sort of region like this, that will be fine. We even have something like this, where if price drops down into this area, I could look for potential buy opportunity, maybe look for some sort of trend line break, and then use that as confirmation to buy this, targeting these highs, and obviously some of the other highs that are just above. Okay, so that's the that's my outlook on gold, USD CAD, pound, dollar, euro dollar, and the DXY. And so just quickly, let's go to Forex Factory and see the economic calendar, a fundamental calendar, and what we could expect for the week. So this is forexfactory.com, where you could easily go and get fundamental news. There's no high impact news today. Obviously, it's just the beginning of the year, so everybody's still kickstarting. But for the week, we have some news. We have the CPI reports from the US, and that will be on Thursday by 2:30 p.m. There's also the Aussie CPI reports by 1:30 a.m. on Wednesday. And then on Tuesday, there's also the Canadian Bank of the Bank of Canada's governor, Maclem, who would speak, and also the Bank of Japan governor, Garuda, who would also speak. So would analysts will be looking especially at the CAD and seeing it's trying to decipher if it's more hawkish or dovish, and try to make trading decision. But basically what you keep an eye on is the CPI report, which is going to be on the January 12th on Thursday by 2:30 p.m. And then on Friday, we'll also have the consumer sentiment, which is 4 p.m. for the US as well. So those are the fundamentals, not so much to cause so much irrationalities in the market. So the technicals will probably hold this way, going into the week and probably into the month, because we're just beginning the brand new year, and everybody's still getting settled in, trying to balance books and all of those things. So that's our outlook for our weekly market outlook for the week. I hope you grabbed it or two. Remember, if you have questions, if you're watching this on YouTube, just you can quickly ask your questions or type in your questions there. I'll see if I can answer. I'll try and answer your questions. And then please leave a like. If you're not subscribed to the channel, subscribe. If you don't have an account with ANZO Capital, there's lots of perks with trading in ANZO Capital. Just in the description of the video, there is a link to set up an account, with a non-deal index broker, a trading platform where you really enjoy no recruits, no slippages, and all those things. Okay, so thank you very much for joining in here. It's a pleasure to have you, and I'll see you in the next video. Until then, do have a wonderful day, have a wonderful year, a wonderful month, a wonderful week. All right, and let's make some peeps together in the markets in 2023. So cheers. Until next time, stay safe and bye for now.